When it comes to EV production, Tesla is at the top and has remained there for many years. However, a few up-and-coming EV businesses are rapidly emerging and could one day pose a serious threat to Tesla. Welcome back to Everything Tesla Stock, everyone. Recently established a new joint venture in Europe to produce huge battery electric vehicles for both businesses. These automakers claim that the collaboration aims to introduce two electric vans, one built on Rivian's upcoming second-generation light van platform, and the other based on Mercedes' new electric van architecture. Wedbush analyst Dan Ives responded to this by offering some of his opinions on how this collaboration would affect Tesla. This is the impact of the Rivian-Mercedes-Benz electric van alliance on Tesla's stock price, he said. Details will be revealed in this video. And turn on the notification bell if you enjoy this kind of content so that you can be informed about all of Tesla's developments. Dan Ives is Wedbush Securities Managing Director and Senior Equity Analyst. In addition, he is a great supporter of Tesla and frequently expresses his own views on why the firm will grow significantly in the years to come. Ives claims that Tesla's profitability is revolutionary for the carmaker and that future demand for its vehicles is only going to grow. Rivian, a recent arrival to the market, has announced a significant alliance with one of the world's largest automakers. This might have some impact on the price of Tesla stock. But what does this collaboration entail for Tesla's stock price? To find out, keep watching. First, it can indicate a slight decline in Tesla's market share, given that two automakers are working together on this project. We can anticipate something excellent that will rival Tesla's offerings in the EV market. The goal of this agreement, according to both businesses, is to use an existing Mercedes-Benz site in Central Eastern Europe to construct a brand new plant for the production of electric-only vehicles. Together, the two businesses will finance and operate a Mercedes-Benz manufacturing here. The Memorandum of Cooperation states that both companies' vans will be manufactured in this factory, with manufacturing expected to begin in a few years. With important alliances like Mercedes, Dan Ives thinks this is a significant step forward for the European approach. Additionally, he pointed out that Rivian has a special window of opportunity in 2023 and beyond to target the European commercial market. The eVito panel van, eSprinter, eVito Tura, and EQV are the four battery electric vans that the automaker currently manufactures and markets. More than 9,000 of the 334,000 automobiles it sold in 2021 were electric. In a recent statement, Matthias Geisen, CEO of Mercedes-Benz Vans, stated that the firm is exchanging technologies and investments with Rivian because both companies have the same strategic goal: to expedite the electrification of the van industry while providing its consumers with high-quality, sustainable products. Mercedes-Benz and Rivian have agreed to work together on cost-cutting initiatives, but they have not indicated if their joint venture will be equally owned. The two automakers manufacture passenger electric vehicles in addition to electric vans, which are primarily utilized for business purposes. Given that Tesla also manufactures EVs, there's a good likelihood that its market share will decline after Rivian and Mercedes-Benz's new electric cars are released. Even while these businesses might not be as skilled in EV manufacturing as Tesla, there is no reason why they cannot increase their cooperation in this field, which is currently dominated by Tesla. In the second quarter, Rivian manufactured 4,401 automobiles, a 72% increase over the first quarter. According to the corporation, it is on track to meet its 2022 production target of 25,000 electric vehicles, which is half of its initial estimate of 50,000. The corporation is still having trouble meeting expectations. Despite its efforts to increase production, the carmaker's production ramp-up has been rocky, and supply chain issues facing the industry as a whole have had a special impact on it, mostly because it hasn't yet built solid relationships with suppliers. Due to supply chain problems, Rivian reduced its initial objective of shipping 50,000 vehicles this year to 25,000. As of June 30th, just about 9,000 automobiles have been produced. While the facility can presently produce 150,000 cars annually, it expects the construction of its Illinois plant to boost capacity to 200,000 vehicles next year. However, Tesla has surpassed this margin in both car manufacturing and delivery. Between 2013 and 2021, Tesla's annual deliveries increased dramatically from 22,477 to 936,172 vehicles. The carmaker can produce around 1.9 million automobiles a year at its facilities in China, Texas, Germany, and California. Additionally, Tesla's 2017 revenue of about $11.8 billion grew to about $53.80 billion in 2021 at a 46% compound annual growth rate. Although there is currently no set schedule, Rivian plans to establish its second factory in Georgia in 2024 and anticipates that its manufacturing capacity will exceed 600,000 vehicles after this. Therefore, by the end of the decade, Rivian will probably be much smaller than Tesla. For two key reasons. Rivian might struggle to grow as rapidly as Tesla. First off, the EV market is far more saturated now than it was during Tesla's meteoric rise. In addition to Tesla's Model X, the upcoming Cybertruck, and additional robo-vans, Rivian still faces competition from other electric vehicle manufacturers such as Stellantis, formerly Fiat Chrysler, and smaller electric delivery vehicle manufacturers like Canoo, which recently received a significant order from Walmart. Second, many of Tesla's early losses were mitigated by tax breaks, attractive financing terms, and significant government assistance. For the foreseeable future, Rivian and other smaller EV producers will find it more difficult to obtain the same benefits. Similarly, Dan Ives said that Rivian's production narrative will be in the forefront in the upcoming quarters, but he also mentioned that the company is still facing supply headwinds that make it difficult for it to achieve its objectives. Moreover, Ives continues to forecast that Tesla shares would eventually reach $400, even after granting an outperform rating and increasing his price objective for Rivian shares from $40 to $45, at least for the time being. The auto sector has to contend with two significant obstacles. One is how the epidemic has disrupted the supply chain, forcing automakers to temporarily close their plants and services because of lockdowns and other restrictions. Additionally, one of the factors driving up the price of raw materials is Russia's invasion of Ukraine in February 2022. Since these countries are major suppliers of these vital metals, the price of nickel, cobalt, and other raw materials for EVs has gone up. As a result, the cost of manufacturing cars has gone up. The average cost of raw materials for a single EV has increased by approximately 144% in just 2 years, to nearly $8,255 as of late May, according to financial advising and consulting firm Alex Bart. As of March 2020, these expenses came to approximately $3,381. Over the past 2 years, the average electric vehicles development expenses have increased by about $2,000, according to the consultancy firm. Car manufacturers' attempts to enter the EV market have been seriously impeded by these issues. But in spite of these market conditions, Tesla has managed to overcome every obstacle and expand the production and distribution of its vehicles. Rivian will need to put in years of consistent work to achieve this, despite the fact that Tesla is far ahead of this automaker. Some analysts, like as Garrett Nelson of CFRA Research, are cautiously optimistic about the long-term effects of Rivian's agreement with Mercedes-Benz, although it doesn't significantly alter the company's short-term prospects and cash burn rates, which are of significant concern to investors, especially given that a few upstart EV companies have either recently declared bankruptcy or issued warnings of liquidity issues. He said, Rivian's MO with Mercedes is positive. Additionally, if Rivian sticks to its current production plans and increases production over the following 4 years, some experts predict that its revenue